IT and pharma, which were being seen as the biggest beneficiaries if Trump was to take the center stage in the US. But do you think after that 4% surge that we've seen yesterday already on the IT space, is more or less everything, all the goods priced in the IT space? Or do you think there could be much more even beyond this level as well in the IT space and some of the stocks can still be bought into?
You must understand that Donald Trump is well known for his tweets, and the market do not move up in one direction on a regular basis. There will be lot of volatility. Of course, now there have been a lot of reports that sectors like IT, pharma, or for that reason, electronic exports, these are going to be pockets of opportunities once more clarity comes in. But I think one thing is very clear that India enjoys a very strong relationship with Donald Trump, and I think that is definitely going to be positive in the longer term. But yes, in the short to medium term, volatility will be very high. In fact, one can definitely expect more volatility in the coming few weeks. I mean, depending on what global policies Donald Trump shares. But I think one positive part is that China will be a kind of a negative point, and that indirectly will obviously benefit India. In fact, India stands to benefit, at least on that side. Large cap stocks like Infosys, TCS, Tata Technologies. I think these are companies where a large part of their revenue comes from the US market. And I think gradually, as Trump takes over, you're going to see a change in the commentary, the order book wins. These are all going to be data points which possibly, from the December quarter, one could get little more clarity. Yesterday was more of sentimental rise, but today, if you ask me, I think there could be a little bit of profit booking. See, I think these data points are not going to come in that quickly, but yes, the markets are hopeful that there would be a good demand push for Indian IT companies, and that could obviously lead to better volume kind of growth expansion. Margins definitely would be very crucial also. But I think bigger, larger IT companies which have got large exposure to the US markets, I think, clearly, I think you could see a little bit of consolidation happening. So, I mean, there's a lot of runway ahead. But as of now, I wouldn't suggest that anybody should rush into buy. Post the December quarter, one could see a decent number. And in fact, as far as pharma is concerned, see the pharma market also clearly is a little tricky because what kind of tariffs are imposed on Indian exports is also going to be another important data point which the industry is going to see here. I think clearly, in certain categories, some companies may get affected, some companies may benefit. But overall, I think the mood in the market is that pharma and IT are two sectors which have been beaten down and which possibly could benefit, over the next, say, 6-12 months.
Mr. Rani, how are you really looking at the IT sector specifically? This is the sector that has shown a lot of enthusiasm with Trump's victory. Uh, but is everything is all hunky dory right here? Are there going to be further challenges? Earlier, we were expecting that once Trump comes to fore, there will be again stricter policies on H1B that could hurt the IT sector again. But this sector is probably looking at loosening purse strings of clients with lower taxes and probably businesses getting started from them. But how should one retail investor really look at the IT pocket after the yesterday's move and what has played out in the earnings so far?
So basically, IT suffered last time when Trump was around because he was very clear that you need to have indigenous people working. I mean, as in the locals working for IT within US as such. Yeah, uh, two things out here. If you see the work base of, sorry, excuse me, even the IT players in the US today, the Indian IT players, 60 or 70% of their workforce is the local people, right? So that arbitrage is gone. Secondly, I think the good part is, as you rightly mentioned, is that with the cuts in taxes that he's talking about, the corporates and stuff like that, that should give a very clear picture to the corporates to further look at growth, and they'll go back into the discretionary space. And that's why our belief was that this is the space to be blocked into even before we saw a Trump trade playing out. In fact, we became bullish on IT in July of this year itself because we saw the numbers of TCS. And by the way, according to us, TCS is the bellwether for the IT space in this country. And we saw them adding manpower. We realized that things are coming back to four as such in IT. And obviously, when the Fed announced interest rate cuts, that was another move for us. I mean, we said, okay, this is where the things are working out. Didn't work out to that extent, but the fact is, when Trump came back, he's talking about cuts in US and tax cuts in the US. So that seems to be the healthy part. So I think that is where our comfort came, and we've been totally overweight IT since then. And yeah, we continue to be. I don't see that. I think IT and banking will be the two sectors which will be the leaders going forward from here on.